Hey. Oh, why is it saying unstable connection? I don't know why it's saying unstable connection. Hi. I'm going ahead and starting my live. For those of you who are, when is it gonna let me go ahead and do this? Um, let's see. All right, so for those of you who are joining me live, this is going to be a live regarding USDA home loans. They're 0% down, 100% financing, and they also let you include your closing cost in that financing. They are rural development loans, but they are not just in areas that are traditionally rural. um, I am so sorry, y'all. So hopefully you get a chance to share and follow. If you haven't done that already, please share that I'm on. If I really recommend this loan for anyone who may be looking for an opportunity to get a home loan that does not require, that is not credit score driven. And even if you do have good credit, it's still a good loan for you. Um, and thank you guys for being on. I'm sorry, one moment, because I had to let my dog out like right before I started, and then he's barking and get back in. So one moment, I'll be right back. I'll show y'all how to do the application, because the application process online is somewhat daunting, because they make you do a registration. They make you do a registration in order for you to be able to get approved, to get the application done online. And I'm looking at my lighting here. Let me see if I can get this, because I got another light back here. I think that's better. All right. So I wanted to show you guys tonight about how this application registration works, because people are trying to get on online. One other thing, I need to see what you guys are seeing. So I'm going to brighten my phone up some. So I had on a little bit of a dark mode for earlier this today. Um, so what's happening is people are trying to get the application and go online to complete the application, but it's hard to find the online application. And so what will happen if you don't complete the application online? Then you'll have to contact the USDA for a hard copy application. And even completing it online, it's not like it's online form, so it's not like data entry where you're filling in stuff. I don't know why this thing is so antiquated. It's actually an actual form that you are filling in the boxes for. So it does require a registration for the application. But the biggest thing I want to make sure that you guys are aware of is that there are two different USDA home loan. Okay, first, rural. Let me get this explanation clear to you. When we say rural development loans. We are talking about areas that were approved for rural development loans. And if you are newly purchasing a home or just now purchasing a home, what you'll find out is areas that were once upon a time rural are now developed areas that have traditional stores. They're more populated. They have less farms, more homes. And so they are more densely populated with people and homes, as opposed to just rural land out there, with farms. So if you like rural, then these loans will work in the rural areas where there are farms, but they also work in a lot of areas that are closer to urban communities. Keep in mind, they're looking for a population that's on near or around less than 20,000 people. Okay, so um, you will find that there are The suburbs that are closer to the city tend to have a denser population of people, and then there are little pockets of smaller areas that are close to those that have that are rural development friendly areas, or approved areas. Takes a long time and very hard to get. All right, so Alvalinda Marshall, you're right. The loan process for the USDA loans, home loans, do take a long time to get, but they're not very hard to get. Um, if you have like really, really, really bad credit, then you're probably not going to get a loan from anybody. That's first off. If you have mediocre credit or low to no credit, meaning it's not necessarily that you don't that you have a lot of bad credit history. It's just maybe that you don't use credit enough to generate a decent score, or you had some issues on your credit report that kept you from being able to acquire credit. So they're older, but you still don't have any new credit. So, but you do have, maybe you've been paying your rent on time for 12 months, or you've been paying your utility bills on time for 12 months. They will use other forms of, okay, your daughter has a 680 credit score. All right, so now keep in mind, you say 680 credit score, and they're still going to take the middle score. And so it's going to look at all three credit scores, it's going to take the middle score. Now 680, I don't know if she has applied for the loan yet, but yes, it does take a long time to get the loan. But as far as it being hard with a 680 credit score, if that is indeed her score, that's a streamlined process. So if your credit score is a 640 or above, there are algorithms that take your application through the process quicker, because it does not have to be underwritten. Now, underwritten means that if your credit score is below 640, then somebody is going to have to go in by hand and see what your issues are on your credit report to determine whether you're going to qualify. All this is going to take time. Keep in mind, because if you go through the USDA Direct, you're right, Alvalinda. A lot of realtors do not like to do it. It's because it takes long. And that's why I always tell people, first of all, let me go back through the credit score situation. If you have a credit score of 640 or below, less than 640, then they will have to do a hand underwriting process. You can take that application to a direct lender that does them, or you can take that application to a USDA, a lender that is approved to do them, which is called a USDA guaranteed loan, or you take it to the USDA, which is the United States Department of Agriculture, and you actually submit it to them. I'm going to get to your point in just a moment about the realtor, Alvalinda, but first let me address the credit score. So what happens is, if you go to the United States Department of Agriculture directly and you say, I don't, I just need my situation is such that I need to be able to try to get a loan, and my credit is not all that good, and I'm not going to be able to get the kind of house that I'd like to get, or I might not be able to get the kind of house that I like to get, because a traditional lender is not going to approve me because of my credit score, or what I do get approved for is not going to be enough in value to get me the type of home I'm trying to get. So I cannot get a traditional mortgage with my credit. So they're going to do a soft pull to your credit first. And when they do that soft pull, it's very similar to a credit card that says this is not going to be any impact to your credit score. They just go in and kind of see a surface, like what's going on in general, what's on there in general. Is there are there any red flags? Once they look at your credit and determine that there's not a lot of red flags, then they'll tell you it's time to go to the next level. If there are red flags, then they'll set up an appointment for an interview with you, either over the phone or in person. Most of these are probably done over the phone now because of COVID, but they'll set up an interview with you and talk to you about what's actually going on with your credit and what's hindering you from being able to move forward. Okay, I always say, if you can't get this loan with them that goes low to no credit, you're not going to get a mortgage from anybody. So why not start somewhere? So find out from them exactly what it is that they're looking for, or what's wrong at least, so that you know where to start. Because how many of you have decided that you wanted to do something, but you felt like, I'm not ready to do it, and 2 years later you're still not ready to do it? Because you never knew exactly what might be hindering you. So I would recommend that you at least submit the application. Okay. So if I go through and I say, okay, I submitted the application, and they tell me, I don't have anything that I need to do, we're going to take it to the next level. Alvalinda is making mention, and she's right, that a lot of realtors, they don't like to do the USDA home loans. And that's why I say, because it takes a while for you to, a long time for you to get the loan approved. When she says a long time, yes, it can take several extra months. So if you are digging in and you've been ready to go, and you finally, this is a lot of people's situation. They have decided that they want to be homeowners. If you are at the point where you need a loan that's 0% down and 100% financing, you likely did not just go to a bank, can't just go to a bank, walk in the door, say, here's my credit report, and I'm ready. I got all my money. I got my 3 to 6% down payment, and I got my closing costs, and I'm ready to roll. If that's you, this loan is not for you in the first place. You got the credit, you got the money, you got the down payment, you have excellent income. This is not your loan. But if that's not the situation, and you're talking about the government trying to give you something, yes, it's going to take some time. But think of it this way. If you started now and you're patient and you don't go looking at houses and before your application is approved, then when you're ready to go look at houses, you at minimum have an approved application. Even after you wait for this application, it's going to take at least 90 days for you to get it approved. And that's going to be way longer than it takes you to get a bank approved mortgage. It's going to take you about 90 days. I would say you just need to hold tight and wait your 3 or 4 months and just sit back and go through the process of how they send you through the process to get your pre-approval. While you're in the process of getting your pre-approval, no, do not apply for any more credit. No, do not use any credit. Keep yourself focused that you are in the process of getting ready to buy your first home, or getting ready to buy a home after having had one and maybe things didn't go well with that house, or you're in an FHA mortgage and the mortgage is really high, and you are in the process of, maybe you're in the process of no longer being with your spouse, and you're carrying the weight of this mortgage, and it's one person income. Maybe your spouse is deceased, maybe your spouse have dissolved the marriage, maybe you are single again, maybe you maybe you never had a home before, this is your first home. Whatever the situation is, and you don't have that money saved up, this is a good mortgage for you. Now, I will tell you this, it does take a long time for you to get the mortgage approved, but I would not go contact a real estate agent and ask them to take me to go see homes if, do they have a limit of the size house? Just a moment. Avelina, I got a feeling that you know these answers, but I'm going to go ahead and give it to you in just a moment for that answer as far as the size of the house. But I would go ahead and, if this is your situation, if you are on here, if you saw that I said 0% down, 100% financing, low to no credit score, you already, if you fit one of those categories, you already are probably struggling. Because the other thing about USDA home loans is, if you have money in the bank, they won't make you use all the money that you have in the bank. So say you have $15,000 in the bank. They'll ask you to use a percentage of that towards the cost of your mortgage, but they don't try to take all your money and make you put it towards the mortgage. For the most part, like I know people who have $15,000 in the bank, require them to use that money at all. They only required them to pay for their inspection and their insurance, up 1 year of insurance up front, and then they got all that money back at the closing table. So it just depends on where you're getting, what area you're at when you're looking for your house, how much the house costs, and your personal circumstances. All right, so let me go back to how long it's going to take. So yes, the you do have to. It's like sitting in an emergency room and getting your bill done for free. You just gonna sit there and wait because there's nothing that you can do about it if you really want this mortgage. But let me tell you why it's worth the wait. A mortgage can be 15-year. You can get a 15-year mortgage, a 20-year mortgage, a 30-year mortgage, and in this case, if you go through the USDA, they do as many as 33 years. Okay. The interest rate on this mortgage is 3.25%, which is the lowest in the nation. Okay. In addition to this mortgage, if there's a little bit there, like you want this house and the maximum amount for the purchase price is like right about up here, and your income is just kind of sketchy, like, you're not quite making it, they can bring that interest rate down to as low as 1% with a subsidy. A subsidy is saying that if we consider you kind of low income, and this is the area that you want to move into, this is the house that you want, we can help you out with that 3.25% sum and bring that interest rate down to as low as 1% by helping you pay that mortgage down some. So, and another thing, so let's go to the next. First of all, another reason why this is a good mortgage. I mean, and I'm an advocate for it, and not because I don't package the mortgages. I don't get anything from the USDA to tell you about the mortgages. I'm not a real estate agent. I do work for the federal government, but not on these mortgages. I used to do mortgages, but not these mortgages. I am just somebody who, this first of all is my ministry. I know a lot about them because I help people acquire. And yes, I myself have one. So, and I've had traditional mortgages, all FHA mortgages. I've been an investor where I've owned property, and I am telling you, compared to what your interest rate. Well, I'm gonna tell you something about the waiting list, the waiting part. I will tell you, it's going to take you anywhere from 3 to 4 months longer to get this mortgage approved. So for you to get mortgage from a lender for a traditional FHA or conventional mortgage. Okay. But I will also tell you this, the difference between your mortgage. So say you buy a house that costs $190,000. I'm just going to throw a number up there. And you go to an FHA mortgage lender and they tell you that your mortgage payments would be around $1,200, and that's going to include your taxes and insurance and the mortgage itself, right? That same mortgage can be $400 to $500 less through the USDA mortgage. You understand what I'm saying? So if you're talking about 30 to 33 years for a mortgage, that's going to save you $400 a month. I'm going to keep it conservative, even though it's even more money than that you'll save. It's going to save you about $400 a month on the cost of your mortgage. You're talking about almost $5,000 a year. You're talking about now that $400 a month that you would have in mortgage payments now is how much more mortgage you can afford for a house. So you tell me this, if you have to wait an additional 3, 4, even 5 months for this mortgage to go through, in the grander scheme of things, 5 months compared to 30 years add an extra $5,000 a year. 5,000 times 30, I'm just doing the math real quick. 5,000 times 30, that's $150,000, right? That's the interest that you're going to save and money that you'll save if you just go ahead on and wait the number of months that it takes you. So yes, that does mean that you have to sit down on your laurels, fill out the application, find out can you get through the pre-approval process. If once you get through the pre-approval process, the only thing that's going to keep you from getting approved is if something in your application changes. So let me tell you something else about this loan. First, she asked a question. This is Alvalinda Marshall. I want to make sure I answer your question. Do they have a limit of the size? In case you guys are looking at the comments. The size of the home limit is 2,000 square feet. That's the maximum size of the home that you can purchase. However, if you have a family size of say 5 or 6, right? So if you say 2,000 square feet, that's traditionally going to be able to be maybe a 3-bedroom house with 2 bathrooms. Decent house, okay. But if you have 6 people in your house And it doesn't matter if they're your children, your grandparents, your cousins, your nieces, your nephews, or whoever. If you have 6 people in your house, they're not gonna. That's gonna be uncomfortable, right? Because you'll find that some of the bedrooms are maybe too little for 2 beds to fit in there, for 2 kids to fit in per bedroom, and you know, you got 4 children or whatever. So it's 2 adults and 4 children. So 3 bedrooms may not work for a family that size if the beds won't fit in the rooms that size. You understand what I'm saying? And so you're gonna want if you have a family size of, say, 5 or 6, and you find that the bedrooms that's a little bit too small, you can ask for a consideration. And what happens is you have to contact the director, and you don't want to be letting them telling you got to go to Washington, and don't let nobody in one of those offices tell you that, oh, it's going to take us forever to get that approved. You go through the director at the USDA for that state, and you send them an email, and you explain to them that you have a family size of XYZ, that the maximum square footage is 2,000, but that the houses that you're finding at 2,000 square feet are not large enough. And they're going to ask you, okay, so what are you looking at? And you'll give them an example of a house. I've seen this house at this address and this house at this address, and the square footage is 2,300 square feet or 2,500 square feet or whatever. And you submit for the extra square footage because of the size of your family. If it fits within the cost of the home for that area, and every area has a different maximum amount of home, then you'll be able to get that approved. Okay, but you will have to ask the director for approval. They don't normally have a problem with that. You just have to explain it. Now, some directors are not familiar with that rule, so you may have to do your research, because it is a rule, and all you have to do is do a Google search. Can I exceed the square footage for the USDA maximum direct home loans? And it'll tell you. I personally do know where the document is. I know exactly where the section is, but I just did a Google search, found the section, helped somebody type it up, sent the email, and got them approved to have a larger square footage. But they should know that. If they don't know that, you'll tell them that it's in the rules that you can exceed the square footage. Now, let me tell you something else about USDA home loans that are different. They're direct. Now, remember I told you it's a direct loan directly through the USDA, and then there are loans that you get through the actual lender. Those are called guaranteed loans. I'm still on the USDA direct loan, and this is why. And the guaranteed loans work the same way, but a lot of the lenders, some lenders are not as familiar with it. They don't learn it. They don't have people who are familiar with it. These loans are out there, and yes, it takes a long time to get them. And yes, realtors don't. A lot of realtors don't like them who are not familiar with them, but there are some good realtors out there. And let me tell you about finding you a good realtor. You have realtors that don't want to be bothered with these loans because of how long it takes for how long it takes for them to actually approve the house after you get it, because they're not going to just approve the loan, they're going to approve the house. The house has to go through an approval process. A lot of realtors are used to being able to call the bank. They got buddies that work at the bank. They can call the bank and say, what's going on with my borrower? The mortgage is taking XYZ time, and this person is ready to sell. They can't do that with the USDA. But there are some good realtors out there that if you say, I'm doing a government loan, I need a realtor that's going to be patient with me and that's going to advocate for me to be able to purchase a house with this loan. And this is why. Because a lot of times sellers also don't want to wait for your lending to go through. That's why I always say get your pre-approval first. Find out if you're going to get approved, how much you're going to get approved for. Get all that hashed out before you start looking for a house. And before you start bugging a lender. Now, you can ask a lender, are they familiar with the USDA loan? They may say yes or no, they're not familiar with it, or yes or no, they're not willing to go through the process. But if you talk to it's some real estate agent. It don't take a rocket scientist to figure this out. It takes time. It takes time and patience. And it takes a realtor that's willing to advocate for you. Just like there are realtors that won't do it because they don't have time, because they make so much money, there are realtors that don't have a lot of clients, really would like an opportunity to work with somebody that's going to be patient with them while they're patient with you. and really willing to do the footwork and the legwork to get this thing done. So you may have to make a few phone calls to find a realtor that's going to work with you after you get your pre-approval. And this is why. After you get it pre-approved, it still takes them forever to finish the paperwork for the actual closing. Okay? And so the person that's selling their house has to be willing to wait for that process. Now, typically, when you put a mortgage in, you do it with a contingency, right? And so I always tell people, when you're going with a realtor, you need to make sure that you're asking them for, how many days are you willing to wait? I'm going to ask you for 120 days, and we'll do our best not to use up all those 120 days, but we might need them. And if that person is able to wait for your mortgage, fine. But you can use these mortgages to purchase new property also, new construction also. So you can have houses built with these USDA loans also. So it's all that is something that you may want to consider in this process. Okay. So so I told you about making sure that you get the home approved before. Let me see. It says some new messages. They also made me pay off something off my credit and still deny me. What can I do? All right, so they made you pay off something on your credit and still denied you. Did you go directly through the USDA, or did you go through a lender that does a USDA loan? Use Keysham. Use Keysham. Did you go through a lender? Let me see something. Let's see if I can. Dang it. I don't think I can. No. I was trying to see if I can invite you on, but you don't have enough followers. So you went straight to the USDA. All right, so when you went to the USDA and they had you pay something off, and then still denied you, when they gave you the letter telling you what you were supposed to get paid off, and then they turned around and denied you, this would be me personally. I would be going straight to the director for that state, and I would let them know, because when they sent you what you were supposed to pay off, they sent you a breakdown of what they were concerned with or what needed to be paid off. Okay, so they sent you a breakdown. They sent you a letter saying, okay, this is what we are concerned with. This is what we feel like you need to pay off. Now, you paid that off, but here's my question. Did you do anything else after you paid that? Because they're going to pull your credit again. So they don't just do one credit pull, tell you what's on there, and then that's done. They're going to pull your credit again after you say that you paid off what was supposed to be paid off, right? And then if anything else is on your credit that can cause you to be disqualified, that can hinder you from getting your credit to go through. So I would be asking them, if this is the letter that you sent me telling me this is what was wrong and this is what I took care of, now you need to tell me why you're not approving me now. Because you have to have something that's on your credit, that you paid 12 months on time. It could be your rent. It could be utility bills. But if you have another collection or a judgment or something that came up on your credit report, anything like that, nothing else was on my credit. So then you need to go to the director and you need to give them a copy. You need to give them a copy of the letter and tell them that you met the qualifications or guidelines that they told you that you needed to have in order for you to get that loan. I don't know that happens. So somebody must have made a mistake, but I can't understand what they could have made, because typically they do the hand underwriting and they kind of look through and they see exactly what needs to be done. And then they're supposed to be able to let your mortgage go through because they're sending you a letter telling you what needs to be completed or what needs to be taken care of. If you took care of what they said needed to be taken care of, it wouldn't be no reason for you not to be approved. So now you need to go and contact the director and ask them to explain to you, why was my credit not approved? It doesn't work like that. They don't just deny you like that. It's got to be something, like you said, nothing else is on your credit. You can ask them for a copy of your credit report or ask them for an explanation as to why are you not approving me after I did exactly what you told me to do. I don't know of that issue. So maybe you just had somebody that didn't know what they were doing and you need to complain to the director. But there is a director over that office first, so I would take it to the office director first and ask them to review the mortgage and explain to you why you weren't approved. And then if they still cannot explain it, then I would take it to the state director and ask and tell them what happened. Because I've had state directors, like I've had directors over the office that'll say, like I said, you can't get the extra square footage. There's another law that says that you can go $5,000 above what your maximum amount is that you get approved for, and they can approve it. They have to go to their director to ask the director to approve, but they can approve $5,000 more than what you qualify for, and that's just by asking. And I've had people, the director over that office, that'll say, nope, I can't do that. I don't know where you got that from. Okay, then you go to the state director, and the state director says, yep, that is absolutely true. We can get that approved, and we'll talk to them and find out what's going on and get those mortgages approved. So that state director has more authority over the office director. So I would go to, because there's a director that's over the office for the county, and then they have loan packages that are in that office that actually go through the approval process. Sometimes you're dealing with somebody that's new or somebody that doesn't have a lot of experience, and they act like they speak with authority, but they don't know. And so you need to go over their head. So if you did exactly what you were supposed to do and nothing else is on your credit, then it's time for you to start advocating for yourself and making sure that they do what they're supposed to do, because that is not supposed to happen. Once they tell you what you're supposed to do, you do it, and it should be fine. But they will tell you if something has been added or changed to your credit report. You said nothing else was on your credit report. They should have sent you a copy of the new credit report, and then you would have had the copy of the old credit report and the new credit report, and then you can see. But they are definitely going to pull it again. So that's what you want to take a look at. And again, nothing else on your credit report. Did you use your credit for anything, like any credit cards or anything like that where you use more of the limit, something like that? Okay, should I pull my credit to see what's on there? Yeah, and annualcreditreport.com. I want to let you guys in, but I don't know. I've seen you like use Keisha. Let me see some. I can't put Keisham in because um she doesn't have enough followers. You have to have at least 1,000 followers. And some of these people that ask me to come in, I let them in, and then they skimming. And I don't want you. Don't mess up. You can't. I don't want you to mess up my live. So I can't just let anybody in. All right. So let me talk about pulling that credit report. A lot of people go to annualcreditreport.com. Yes, that's going to give you all three bureaus. Yes, you get that one time a year. But I always say, and I don't get any money for doing this, but I really need to tell them they need to sponsor me. But Credit Karma will let you see your credit report every day, 10 times a day, 1,000 times a year. They don't care how many times you go pull it. And Credit Karma will give you everything that's on your credit report for TransUnion and Equifax, okay? Now, the benefit of going to the downside of going to Credit Karma is, as in anything, there's nothing that's going to be exactly the same. Like, you can go to one lender and apply for a loan, and they'll say you got a 680 credit score, and you go to another lender and they say your credit score is 659. Your middle score is 659, and you go to another lender and they say your credit score is 698. It just depends on what scoring model they use. Some banks use their own scoring model. Some banks use a specific FICO, the newest FICO scoring model. Some are still using the old FICO scoring model. Some are using, it just depends on what. Some are using Vantage Score. So it just depends on what scoring model they use. Okay. So that's not the relevant. What's relevant is what's on your credit score and whether that score is jumping up and down. That's what you really want to pay attention to as far as Credit Karma is concerned, because you can then tell what impact different things have on your score as far as a generality. I'm hoping I pronounced that correctly, of where your score should be around. Okay, it'll give you an idea. All right, so yes, I recommend getting a copy of your credit score. I recommend going to Credit Karma for those two. You'll get TransUnion and Equifax, and then I recommend you going straight to Experian. Okay, just a minute. I recommend just a minute. Jesus Love, I'll get you in 1 second. I recommend you go straight to Experian, because Experian will also allow you to pull your credit report 10 times a day, 20 times a week. They don't care how often you do it, but Experian will let you pull that up, and it's pretty easy to get into their site to pull your credit report. Okay, so the reason I recommend you do that is because, again, you can see it. You can TransUnion and Equifax on Credit Karma. Credit Karma gets that information like daily. So every day they're going in to see is it a change on one of those bureaus for you. I also like Credit Karma because they give you ideas of what's going on with your credit, whether you would get approved for certain types of credit cards. I wouldn't get those credit cards if you're trying to get a house. They will tell you what to do to improve your score. I always tell people to keep your balance on your credit cards below 10%. Don't mess with that credit. Don't use that credit. Don't pay a light bill, a gas bill, and then think you're going to pay it off on the due date and it's going to make your credit's going to be fine. That's not true. So when you apply for a mortgage, whatever your mortgage is, you want to keep that where it's at. And then you want to I will go to Credit Karma on a regular basis to see if anything pops up. Somebody could pull your credit for a credit card. Don't get those store credit cards because they automatically pull your credit cards. Don't do anything with your credit. What is the credit score for this particular program? For the USDA direct mortgage, there is no minimum credit score. However, if your credit score is 640 or above, they will do what's called a streamlined mortgage. So your mortgage application will go through faster, right? Because they don't have to ask you all these crazy questions. You got a 640 credit score. You good. We can just go ahead and breathe and get you on through. That don't mean you're going to get it in 35 days. It's still going to take you 2 to 3 months to get that mortgage through. It's just that certain things that they don't have to do. A physical person doesn't have to go through and nitpick through it if it's a 640 or above. But if it's 640 or below, then they do have somebody that actually is called hand underwriting. They have to go through and scrutinize. And like this young lady was saying, use Keisha. Am I pronouncing that correctly? Like Keisha. Like Keisha was saying, she went in, they pulled her credit, and then they came back and told her something that she had to change. She fixed whatever it was that they told her that she had to change, and they turned around and still Keisha. Okay, you got an M at the end, Keisha. Then they turned around and denied her after she had done whatever it is that they told her to do. But any little thing could throw that off. If when they pulled your credit, say you applied for a credit card 2 weeks ago, 3 weeks ago, and your card was approved, it's not showing on your credit report, but now it is, and it makes your credit score drop, or it makes you show that you had more debt, or you had a collection on there, and it's not, you didn't look at all 3 scores. If you didn't look at all 3 credit reports, and that collection all of a sudden pops up on one of the reports, but it wasn't on the other report, that can cause you to be out. Another thing is, again, remember they're going for a soft pull. They haven't done that hard credit pull. So it's things that you don't want to have on there, like if it's a recent collection. It could be a hospital bill or something that you didn't know. Now that hospital bills are not supposed to count against you when it comes to mortgages, so I shouldn't use that. But it could be an old creditor. One thing about when you apply for a mortgage, the collection agencies and credit card companies can see, because they have a right to look at your credit report, and they have a right to look at it, and they don't do a regular pull. They have a right to look at it because they're already a lender. So they have a right to see what's going on. Because student loans hurt you. Student loans can hurt you if you in default. Now, I'm going to tell you something about student loans, and because a lot of lenders, even these USDA lenders, may not be thinking about this, and this is something that they don't have a right to do anymore. I don't know how much, and it under 5,000. It don't matter whether it's under 5,000 or over 5,000. They have to go on how much your payments are for student loans now. So it used to be that if you had student loan payments, and I'm trying not to jump around, but Keisha is asking me a whole bunch of questions. Used to be if you had student loan payments, they would have to take 10% of that and make that part of your debt. So say if you had a $50,000, or say say you owe $50,000 of student loans, and they would say, okay, 10% of that is $500, so we're gonna say your payments on that is $500 a month, even though your payments may be zero, or even though your payments may be only $100 because you're on an income-driven repayment plan. That's how they used to have to do it, but now they can't do that anymore. Now they can only use what your actual payments are. So if your payments are zero, they have to use what your time. Another is they can't say, okay, well we on student loan pause, so we have to guesstimate what your student loan is going to be. Nope, I don't care if it's on a pause or not. If the payment is zero, you have to make it zero. That's what counts against my debt. You can't change it because you want to change it. So arbitrarily they used to change it. Now they're not supposed to. But some people who've been in their job for 30 years do their job the way they did it 30 years ago. So FHA, any federal guaranteed mortgage, is supposed to look at student loans based on the actual monthly payments, not that 10% rule. Income guidelines. All right, so I always tell people to go to USDA.gov. Wait a minute. It was somebody else that came before the income guidelines. What is the score? All right, so Jesus Love. This minimum score I told you was a 640. But for the direct loan, they do not require a minimum credit score, but they require you to have, so you can have low to no credit score. A low credit score might be low because you had a judgment on there or not a judgment, no, because you had a collection on there for a car that you had repossessed. Right? And you're somebody who doesn't use a lot of credit anymore. Maybe you only got one credit card and your credit score is still not that good. But that car was repossessed and is charged off. If it's been charged off more than 2 years, the USDA does not count that against you as far as not being able to get the mortgage, even though it may impact your score significantly. You understand? So they're looking at your credit differently than a traditional lender as far as the score is concerned. How long do you need to be on your job? Alvalinda Marshall, you don't even have to have a job with the USDA mortgage. You can be on unemployment. You could be on disability. You could be on Social Security. You could be you could have two people in the household. One is on food stamps and the other one, has a small paying job. Because the thing about the USDA mortgage is they look at the household income, not just your income. So that's another good thing about it, right? So say I make $15 an hour and I work part-time and I get food stamps. Food stamps, they still consider that as part of your income. But my 18-year-old also works and makes $8 an hour. And they work, 20 hours a week. And my husband is working, or my husband gets a disability check. And I have a 22-year-old niece that stays with me, and she's not going to be on the mortgage, but she makes, $15 an hour. She works 40 hours a week. They take the whole household income of everybody that's 18 and older, unless they're full-time students. If they're full-time students, they will only take a maximum of $450 something dollars. I think it's $458 a month of that student's income per month towards the household income. Because they're students, they're going to have extra expenses. A lot of them live away from home, but this is their permanent address. So they're going to take that whole household income, and it may only be one or two people who actually are on the mortgage application. However, the whole household income has to be considered as part of what we're going to be using to pay this mortgage off. It's a unique part of the mortgage. Mortgage companies don't do that for traditional mortgages, but they do it for USDA mortgage. They consider everybody in the household and all those people's income, okay? So the more people in the household, of course, the more income you can have. Now, these are not just for poor people. I gave you an example of a family that is considered under the poverty line, even though everybody's got some sort of income coming in, right? But as a single, you can have a one-person household and still qualify for these loans, even if you can make like $70,000. I always tell people to go to the USDA.gov eligibility map, and I'd say look up eligibility map because it's going to take you straight to the website, and I will show y'all that website. But what you when you go to the website, it'll allow you to do like this interactive tool, which to me, I don't know why they didn't put the application on something like that, but it's an interactive tool that allows you to put your information in to check your eligibility. And the reason I'm getting ready to talk to y'all about how to do this application is because this application sucks. The online application sucks. So if you could get a copy of the actual application by contacting the USDA, and I'll tell you this, you call the USDA office in the area that you're interested in purchasing in. I'll talk to you about areas in a minute too. And keep in mind, I only do these. I start this at 9 o'clock, so this is going to be over at 11 o'clock. So you want to find out, like, what is my eligibility? They have like an interactive eligibility thing, and it's going to allow you to be able to see what loan, I mean, like what maximum loan amount you may qualify for. It's going to ask you a bunch of little funky questions like who's going to be in the household, who's in the household over 18. If they're in college, they're going to ask you for proof that that child has been approved to be in college. Anybody over 18 that is in the house, they're going to want to know what their income is, because this is an income driven program. So you can't be over a certain income. But the income threshold is much higher than most people think. You just have to fill it out and talk about. It's going to ask you like what area you interested in purchasing in. Like I said, how many people are in the household over 18, how many children you have, how many total number of people in the household, because all that is going to impact, again, the square footage. It's going to impact how much of subsidy, if any, that they're going to give you. So they're going to want to see them. Because student loan, okay, I got to her already. Student loan hurt you. I don't know if I answered a student loan question, but we can go back to that if you want to ask me some more on that stupid loan. Student loan. How about income guidelines? Okay, so I kind of told you guys a little bit about the income guidelines. It's going to be household income as opposed to just the people that are applying for income. Oh, okay. And let's see. So I would do the eligibility. It's called, I will do a Google search, but I'll show y'all where to go. It's this is my Google search, I tell you. Write this down. USDA.gov eligibility map. And you're always going to want to see, let me see, I'm going to go back to the I'm going to go to the eligibility page because I want you to see what you're going to want to always see at the top of a page when you're doing a USDA mortgage. So I'm going to do a flip. One moment, I want to show y'all what y'all going to look at I'm going to flip the screen, y'all. Oh, I can't do it here, sorry. Y'all, I watch the news all day. So I'm going to do it this way, hopefully. I got y'all on my little stand here. Let's see. Try to enlarge this. Is it gonna let me enlarge it? Yeah. And put it down some so y'all can see. It's so bright. Let me try to darken that some. Alright. Yeah, y'all can see that, right? Because I can see it, so I know y'all can. Bring it down some. I don't want to turn y'all off by mistake. Let me let the light adjust because it's going to do an adjustment to the light. Alright. It's adjusting. It's adjusted. Ooh. I don't know if y'all can see that. Can y'all see that? I'm going to take it off. I'm not letting nobody in. Let me see. I'm going to probably let Juicy Fruit in. Alright, let's do it like this. I want y'all to be able to see. Now you see where I'm at in the website. I told y'all how to find it, just to like do a quick Google search. But if you actually go to eligibility.sc.egov, or do a screen print. Let me try to back up some. Let me do it like this. I back up some. Do a screen print so y'all can enlarge that. See that? That's where you're gonna go. Okay? So when you go there, You'll be able to do the, and when you're not at a USDA website unless you see this USDA and the little green thing there, and United States Department of Agriculture Rural Development. Remember, I told you rural is not just regular rural. I'm going to show y'all the map in a minute, but I want to show you guys something about eligibility. Hi, Ruby Lou. All is well. Thank you. All right. And I'm going to go to use Kisham. I'm going to go into self-employed in just a minute. How can I get into this with you? Alvalinda, let me see. Okay. I don't know what you mean into this with me, but if you wanted to, if you meant get on live with me, you have to have 1,000 followers. And I really wish I can get somebody on live with me because it's so much more fun when it's interactive. But I gotta watch because I don't know. Some of these people asking to go on with me, I ain't seen them make no comments on nothing about you, and you might get on here and try to show something and get me in trouble. All right. So anyway, I take you to the eligibility. Let me get you guys around a little bit in here. It's got to be people. It must be people new here who've not been on my lives before, because I don't. And the people who are who come on here are probably not here, so that's fine. All right. So this, you see, this says self-assessment here. Okay, and that's where I'm at right now is a self-assessment screen. Okay, and then see where you can build a single family home or purchase a single family home. Y'all want to go to build or purchase? Anybody got an idea whether you want to go to build or purchase? Can I email you? It should be on my page. There should be a way for you to contact me because people have been emailing me. And if you go to CC Corner Chat, my actual page, there should be somewhere in there for you to be able to contact me. But yeah, I make that open for people to contact me. Yeah, I'm new to your life. Okay. Can I email you? Yes, so you can. You'll just go through and it'll let you be able to email me. What do you guys want to see? You want to see build. I had a feeling you were going to say build. You know why? Because it's hard to find a home these days. All right. So, I'm going to go ahead and hit the build a single family home for the assessment. I really don't want to go through this whole assessment, but I'll go through it as y'all want me to, okay? What do USDA stand for? USDA stands for United States Department of Agriculture. Believe it or not, they run a lot of programs. They run the food stamp program for our whole country. And they do these mortgages throughout the country. But these mortgages, where they're going to say that they're rural development. See that says rural development? Rural development is properties that are in rural communities, but not all areas are still rural because they're grandfathered in. So if they were once approved as rural, they're still rural even though they're developed, which means a lot of suburbs, that traditional places that we call suburbs now, were once rural, but they became more urban, so suburban, but they still qualify as rural. So I'm going to pick a state. What state do you want to do, Alvalinda? Or anybody else? Anybody got a state that they want to pick for us to look at? Pick your state or a state that you're interested in moving into. Anybody got a state they want to go to? Going once? Okay, Florida. All right, think about what city that you're interested in Florida, or county. Do you know a county in Florida? Oh, somebody, y'all got slow on me. So Florida got it. Give me a county. You know a county in Florida? I should have said a city and a county. Any county in Florida? I'm just going to pick any county if you don't know a county. Let's do Broward. Okay. Okay, Hillsborough. We'll do Hillsborough. We're not that far, so I'm going to do, well, let me do cancel. All right. So I'm going to go ahead and do Hillsboro. I'm sorry, my computer looks like this. I'm going to have to get a computer that doesn't have this scratchy screen. I think they all do. And so now you're going to go in here and you're going to say how many applicants. So let's just say I don't like to do this whole thing, but I will. So you're the applicant. So now it's going to want to know how many co-applicants. So I'm going to say, now you see how it says how many co-applicants? What if it's you and your child and your husband? Could be. Let's talk about that. An adult member of the household who will also be responsible for repayment of the loan. So say it's just you and your spouse. That's a traditional household, but it could be you, your spouse, and your husband, depending on how bad you want that house. I mean, it could be your spouse and your child, depending on how bad you want the house. Number of minor dependents. So let's just say you have 3 children that are under 18, and you have 1 full-time college student, but this is still going to be their domicile. So they still live here, even though they're 1 full-time student, 18 years old or older. Even if they are in school, in another state, it doesn't matter. They're still considered a resident. This is their permanent house, okay? So they can still be included. And then number of other adults in the household. So say your grandmama or your mama, your husband's mom or your mom lives with y'all. So it's 7 people in this household. You, your spouse, your 3 younger children, your child is away at college, and so your 3 younger children, your children under 18, your child is away at college, or and an adult. An adult might be another adult child or a grandparent or something like that. Doesn't matter. I'm giving you a hypothetical life. Doesn't matter if some of the county being higher than others that you will get a. Do it matter by some of the county being higher than others that you will get a. All right, so you can just about bet in every county there is probably an area that is USDA approved. But there are some counties, because the income in the county, because the income levels in that county are so much higher, because these are not just for poor people. Like, I've had people say, you got to be poor to get these loans. That is not true. You can be poor and get this loan, but you can also have a combined income of over $130,000 and still get this loan. So there's a maximum for the income level, yes, but it's higher than people think. And there is a maximum loan amount for these mortgages, which is slightly above the median home price for these mortgages if you go USDA direct. But if you go directly to a lender, those are called USDA guaranteed mortgages. They allow for you to have a higher mortgage limit. So let me go here. This little thing here to me takes a long time, but since I'm on here for 2 hours, we're only 58 minutes in, and I never do it, I'm going to do it with y'all today. So is a loan applicant or co-applicant at least age 62? Let's just say no. And are there any, but they could be, because a lot of times you'll have more some lenders and people giving loans and stuff feel uncomfortable giving people mortgages who are older, because you may not live for the whole time, whatever. They don't have a right to do that, but ageism is real. But the USDA is not, they don't trip on that. They don't try to keep you from getting a mortgage because of your age. Are there any disabled persons living in the household? I'll say no for the sake of this mortgage, okay? Because obviously if you're disabled, you still have to provide your income. But they have some extra types of loans that you can get if you're 62 or if someone in the household is disabled. Those loans are like different grants. There are grants, grants. Those are monies that you can get that you don't have to pay back if you're over the age of 62 or if someone in the home is disabled. Phone trying to take over and do some wacky stuff. All right, so let me show you a little bit about that. So let's say you're 62. All right, I don't want to read all this, but I'll give you an idea. Okay, y'all there? All right, so say you're 62. Because this is a family deduction, each household receives only one deduction, even if more than one member is elderly or disabled. In the case of a family where the deceased applicant borrower spouse was at least 62 years old or an individual with disabilities, the surviving family member shall continue to be classified as an elderly household for the purpose of determining adjusted income. If, at the time of death, the deceased family member, the dwelling was financed by the agency, the surviving family member occupied the dwelling with the deceased family member at the time of death, and the surviving spouse, if any, has not remarried. That's because they give you like certain subsidies, meaning they give you extra money to help you pay for the mortgage if you're above a certain age. And again, they will allow you, they give you like a grant to fix certain things, like if you need the furnace, I think it's like a $3,000 grant towards some things that might need to be repaired for the mortgage. They just give that to you. And oftentimes people will get these mortgages and it's based on a 2-person household, and the interest rate and everything is affected by whether there's a 62-year-old in the household or someone with a disability. If that person should die, you will still get the same consideration as if, so say you're 40 and your husband is 62 or vice versa, and they were on the mortgage with you, they still will give you these considerations for deductions. And those deductions impact whether they give you a subsidy. A subsidy is them helping you pay the mortgage down some. So remember I told you, some of y'all was here when I told you it's 3.25% interest rate, and the interest rate can be as low as 1%. That's when they give you a subsidy to help you pay for the mortgage. And the subsidy is, they'll pay something towards the actual principal payment, not towards your taxes or insurance, but the actual principal payment, to bring that payment down to as low as 1%. I don't know. Why were you, or you just email me, use Kesham. Thickness, why were you denied? That would be very interesting to know why you were denied, because they're supposed to tell you why you're denied. And if it's something that I can help you with, let me know and I'll try to help you out. Okay. If it's something on your credit that you may need, I don't help people remove stuff from their credit that's not legal. That I won't do. But I will help you find ways to get your credit straightened out if there's some issues with it. So email me, and if you want to talk about that a little bit more personal, we can do that. Okay. All right. So anyway, I'm going to get off of this disability stuff, but there are some considerations for disability. And then when you, okay, so you said you just do that. So did you do USDA? Now here's the thing. If you can't get approved on a USDA direct loan, which means you went directly to the USDA federal government and didn't get approved for that loan, you're probably not going to get approved for other loans either, unless the reason you were not approved was because you were overqualified. But if it was not that you made too much money, or if it was not that, that's pretty much it, is that you make too much money. If it wasn't because you make, your income is just way too high, if it was a reason other than that, let's talk about it. Send me a message and I'll try to help you with that. Or I'll find out if they did something wrong and I'll tell you how to refute it. Okay. All right. So estimated annual property taxes, you got to put that in. So let's just say it's $1,000 for the sake of argument. Now, y'all, if y'all getting these big old fancy houses in these nice areas and stuff like that, you know your tax is going to be higher than $1,000. But in the South, taxes are usually not always that high. Insurance, let's just throw $1,000 in there. We know that's low for insurance, especially these days, but let's just leave it at $1,000. Okay. Now, these are hypothetical scenarios. What else do they want? Oh, other funding source. No, I ain't got no other funding source. This is it. All right. So now, this is what I don't feel like being bothered with, but I'll do it this time. All right. So now I'm saying they want to know your monthly income. So I'm going to say that one applicant, they get fixed income and their income is $870 a month. And then the co-applicant, they work and they usually get around $3,000 a month. I got a student, they don't make any money, and these other family members, nothing. But I got my other family member is my grandmama, and my grandmama get a check, and her check is, $870 a month too. All right. And annual child care expenses, I don't pay that because my grandmama helped me do that. All right, so next. And if you get something like child support or something like that, you can talk about that. So now we're going to talk about debt. And God, I don't want to do this. But let's just say the only thing you have is a car note, and your car note payment is, $350 a month. And I'm going to add a row because you also have some credit card debt, and you usually pay about, $150 to your credit card debt every month. And then I'm going to add one more row because we want to be realistic, because you have car insurance. And for your car insurance, you also pay $100 a month. Okay. Co-applicant, we do that joint. We just threw it in there. I just threw it in there all together. Okay, so I said the monthly debt. Now you could do something else, like you can start adding extra things like food and all that kind of stuff. But let's just keep it simple. Oh, I didn't mean to add a row. So we don't need to add a row there. So we're just going to say next. All right. Now, any delinquent federal debts? No. And the co-applicant, no. That means you're not defaulted on. And if you defaulted on your student loans or something like that, now is a good time for you to consolidate your student loans and do an income-driven repayment plan. You're not doing any payments right now on student loans. They extended this income-driven repayment plan thing. It was supposed to have been done in September, but you can still do it. So it's through the 2023, I think it's September 2023. You can go in and consolidate your student loans and do an income-driven repayment plan. It's going to go off your income. They're going to ask you what your income is, and you're going to tell them, and you don't have to include your spouse's income for this income-driven repayment plan. You can just do your own. And when you do your own, you tell them, how many kids or whatever you have, and they're going to give you the income-driven repayment plan, and that's going to make your federal loans current. So so even though you have no payments to be made, they may show that they're still in some form of default. It's just that no payments are due on them. If you want to correct that on your credit report, you need to do that consolidation now. And that's they have some new laws because of COVID to help you with that. If you have a car note and a credit card open for $2,000, will they be held against you? As far as how much home you can purchase, but just making your payments on time every month for 12 months, that's going to be what's going to help you be okay. An outstanding tax lien with no satisfactory agreement. No, I don't have any outstanding tax liens. These are things that are going to get you a no. Any foreclosure, charge off, bankruptcy, short sales in the last 3 years? Nope, don't have anything like that. Remember, now they're saying any foreclosures. It was 2 years. Any foreclosures, charge offs, bankruptcies, short sales in the last 3 years. Also, if you have some people have car repossessions, if it hasn't happened within the last 3 years, it's been charged off, then you're good. So any foreclosures, charge offs, bankruptcies, or short sales in the last 3 years? Nope, that didn't happen. Any accounts 30 days past due in the last 2 years? Nope. Any outstanding judgments within the last 12 months? Nope. Any outstanding collections accounts or collection accounts paid in full in the last 6 months? Some people might get in call. I wonder what they're going to do with that. I'm about to say yeah and see what they say. For the co-applicant, I'm going to say yes. And for the applicant, I'm going to say no. What they're going to say is automatically. Now, y'all saw what I just said, that the co-applicant had a collection, but they're saying this program is still probably good for you. So you said you had a $56,000 household income. Your total deductions, which means these are the people that's in your, they come out with an estimate for the number of people in your household. Household adjusted income that's your deductions for how much you spend. Household adjusted annual income is $54,000. Maximum adjusted annual income for selected state is $86,000. So they're saying that the maximum income that you can have in that household is $86,000. Okay. And the adjusted repayment summary, adjusted monthly income, monthly debt obligations. This deduction is just kind of considering like your general expenses. They have to take something off. estimated maximum loan amount. See what that estimated maximum loan amount is. What poor person is going to get that if it's just for poor people? See that? So let's see what else they tell you. So you can save this, and this just gives you an idea of how much loan. It's not going to be perfect. You have to put all that other stuff in. So if you have any other expenses that I did not put in there, you just keep adding lines so you get all your expenses covered, so that you get a better idea. And then the monthly insurance and taxes, that's what I came up with, but that's, that's probably wrong. So you have to consider all that in and put it in correctly as best as you can. And this is to give you an idea of what your maximum loan amount is and the maximum income amount for that state. Okay. I'm trying to see how far back it'll let me go. What I want to do is change. I want to change the scenario just a little bit. And why do I want to change the scenario just a little bit? I want to take grandmama out. I'm going to take grandma out. And this is what I don't know, y'all. I don't know everything. I don't pretend like I do. I'm going to take grandmama out. And I'm also going to, this is what I don't know. I was curious about this. Like, because they take household income, what if I say I'm one of the applicants, but my co-applicant is the one with the money, and I don't have any money? And we still have all those, expenses that I talked about. And I said that the co-applicant had a collection, no judgments, any accounts past 30 days past due in the last 2 years. Yep. Let me see what it's going to do to you now. I just gave you a little bit worse credit. Now, by taking that extra income out and that extra person out, I made the income $34,000 for the household. And you can get a $124,000 home. Yeah. See that? Now, the people who live in your household, I ain't gonna tell, and I'm gonna tell y'all this because I want to tell you the truth. I'm a very ethical person. Household situations change. What if grandmama stayed in your household, and at first you qualified for that $200-something thousand because grandmama stayed in your household, and then grandmama died, or grandmama moved into a nursing home because you could no longer take care of her because she has dementia or something, but you have the house? Yes. I'm sorry, you asked that a long time. You should use Kisham. Yes, you can have, you can be self-employed. You have to show 2 years of taxes, of your tax returns. You have to show 2 years of tax returns for you to be able to get the mortgage. But you can be self-employed. Jesus love. Let me tell you about, because I teach people about credit. I do all this stuff that I do for free because this is a ministry for me, and I know I got to start charging people somehow, but I don't, because right now I'm trying to build my following for TikTok. But if you have, wait a minute, somebody just asked me a question. Will that work against you if you call them? If you have a collection on your credit report. Now, keep in mind, this USDA direct loan is not score driven. They just want you to have, decent credit. But if you are going to a lender that's a guaranteed loan, they allow, like if you took this same scenario that I just gave you and you went directly to a lender, then and you say that income of that purchase amount of $200,000 is not enough for you, and you felt like you can afford more, and your income actually shows you can afford more, but there's a maximum for your area because they're not going to approve you for more than your area maximum. The area maximum, if you have if you go through a lender, is higher than it is if you go through the USDA. So if you're going through a lender, they're going to say they want a credit score minimum of 640, and sometimes they will let you go a little bit lower than that, like maybe a 620. They don't like to go much lower than that. That's because they would prefer to do that streamline because it's already going to take you longer. So if you come through the lender, they still have to, they pre-approve you, then they send your mortgage to the USDA for the USDA to approve you. They don't want to wait for the USDA to do a handwritten mortgage. Underwritten mortgage. So they would like to do the streamline process. So that's why a lot of the lenders will say, I'm not doing you if you're not above 640, because they don't want to be bothered with waiting for the USDA to take 10,000 years to approve your mortgage. Okay. But then there are yet still some mortgage companies that will say, okay, well, we'll take you if your score is below. I'm trying to get this green out of my eyes. If your score is below a certain amount, because we'll just do a hand underwrite. So we're going to hand underwrite it, and we still got to send it to USDA for them to hand underwrite it. But they will allow you to be able to purchase higher than the maximum loan amount for a USDA mortgage. Because the USDA mortgage, like I showed you at 224, that might be the maximum for the whole state. They may not let you have any more than that. Just like that maximum adjusted annual income. I'm going to show y'all that again. The maximum adjusted annual income was 86,000, but when you go to the lender, they may allow you to have a higher income than the USDA direct. So the lender has different guidelines. The only thing that but it's still going to have a maximum amount that you can purchase. It's just higher than the USDA. All right. But if you having issues like this, that 124,000, because remember we took grandmama's income out, it ain't gonna let you get no more than that. But so let's go back to okay, so I'm talking about USDA mortgages, but I want to tell you about this credit question that somebody asked me. If you close out an account so say back in the day you you used to use credit and you messed up, and now you're older and you know what you're doing now, but you had an account, there was a collection on your account and you paid it off, and you got rid of that collection. If that collection was on there and it's 6 years old, and all your new credit is 3 to 4 years old, then that old collection that you had on there for 2 years that got removed, that's the age of your accounts. The age of your credit is 30% of your score. So if that one that you had on there, the 6 years old, and now your new stuff is like 2 or 3 years old, you've just re-aged your experience with credit from 6 years to 50% of that, just 2 to 3 years. So now your score is it's going to impact your credit score. It's going to make your score drop because you got rid of an account. So that's why I tell people, don't close a credit card because you paid it off. Especially if it was older. Like, I know people like have like these little credit cards, like $500. They're like, why do I have that $500 credit card still? I don't even use it anymore. I now get credit cards with limits of $5,000, $6,000, $7,000. Why do I still have that $500 credit card? I recommend you use that one for specific things. Like, I just use that one when I go get some gas or something, and then I pay it off. But because it's my oldest credit trade line, I want to keep it because it's making my credit score higher. It's giving me more of a credit history. I got all those folded blankets. Those are blankets that I got to fold, y'all. So you're going to want to keep accounts on your credit report that are older. Now, what if it's a collection? Like, it's a $250 collection that was charged off several years ago. First of all, they're not going to make you pay that off unless it's less than 3 years. Then they're going to tell you to pay it off. Then that's going to make your credit score drop. But if it's USDA direct, it's not supposed to be credit score driven. So, like I said, for that lady that got not approved, she emailed me. We're going to talk about that because No, that should not be. I'll tell you who to go to complain to and everything. And no. And that's just a matter of picking up the telephone and calling. Or what I do is I don't call nobody. I send emails. And then I look for the rule on credit. So I'll do a Google search like, what are the credit guidelines one, if I have an issue on my credit report and the USDA told me to remove it. Or so I would say issue on credit report, USDA said remove, um, still denied. And there's going to be something to pop up that's going to tell you where that's at. It could be a tutorial. I have stuff up now. Let me see if I have any up now. I have tutorials that I've actually read through for the USDA. I don't have them up now. Well, I don't have none of them up. I'll go through their slides. Like they might say this is a training session for USDA packagers or USDA loan approvers, and I'll read what their new guidelines are. So because I read it, I paid attention, I made sure that whoever I was helping, this is the situation that worked for them, or this is their situation, and I found in here under section 7153 that this is supposed to be. And if you tell me not, I'm going to tell you, please tell me this says section 7153. I cut and pasted. I put it in an email. I tell you exactly where it's at. I tell you exactly the date it was published. And you tell me why you're not approving based on XYZ. And I have had them come back and say, I cannot, I can't, they cannot refute it. You're right. This person has to be approved. Let my boss know. The boss come back, and because they don't know everything. And if you start challenging them on stuff that's supposed to be to your benefit and they're not doing it, they'll change it. And I'm telling you, I haven't changed it all the time. Like my mother, I paid her mortgage off, and they said she owed $22,000, and then she don't like you don't have to pay it unless you leave out. You won't have to pay. I was like, it don't work like that. You got to come back and you have to reappraise her because she had a subsidy. You have to reappraise it. You have to find out what the appraisal is based on whether she's done any improvements to the house. And if it's just cosmetic and not permanent improvements, like she hasn't enlarged the property or anything like that, then you can't put it at the exact same amount she actually purchased it for. You have to reduce, what you say that people owe. So it doesn't work like that. And nobody has come out to appraise this. Oh, we're gonna get an appraisal come out. Yeah, you're gonna need to get somebody to come out and appraise this, because if she should die or leave her property, we don't owe that on that property. Nope, we're not gonna take that. So you have to know what it only takes a simple Google search. Y'all, please make sure y'all follow. Everybody tells me this all the time. They watch my stuff and they say, Cheryl, how often do you tell people to follow? If you have to get off here and follow and come back, I will still be on here until 11 o'clock. Please make sure you follow. I mean, if you go look at something and come back, whatever you gotta do, please don't forget to follow and don't forget to share. Thank you. I see more guy follow. Let me see. My credit card that I want to close. Target is only 2 years old. Why are you closing it? No, don't. Okay, if you want to close it. If you want to close it, fine. Because you need to a certain percentage of trade lines, and you need, if it is something that you've paid off, keep in mind that we want to keep our percentage of credit that we're using below 10%, right? So if that's something that you paid off, that credit card limit is sitting there, and you've got 0% of it used, but it's actually adding to your score because it's showing more available credit but less usage. So if you use another credit card, say you got a credit card with a, say your Target credit card was only $1,000 limit, and you got another credit card with a $3,000 limit. So your total credit card available credit is $4,000, right? So say you decide to use $1,000 of that. So you've used 20% of your available credit. You still have $3,000 available credit, 1,000 with Target, and still 2,000 left with that other card, right? Because you only used 1,000 of the three. So now that's 3,000 left. That's only 20% credit. So take that same scenario and you get rid of Target, and you have $3,000, you get the one credit card, and you use $1,000 of that, you only get $2,000 left available. You're using 1/3. You use 33% of your credit as opposed to 25% of your credit. You see what I'm saying? It's going to make your credit score worse because you actually, that same 1,000 that you use because you got rid of Target becomes 33% of what you had, of your only $3,000 you had left. So you want to keep your, if you can keep the Target, I know you don't want to use it, but if you go to Target, I mean, get your milk on your Target card and send the payment right away. Okay. Or send it, as soon as it's not pending anymore, send it back to Target. Just keep the card open. You don't have to use it often, just use it from time to time. Okay. But I recommend if you pay something off, it's gonna be a buffer for you if you're using other credit. And then another thing is, if you are using other credit, you want to make sure you're making you gotta think of 2 dates on your credit report. Like most people only think of one date, the due date, right? You need to also, and I have a little video I do on that. You need to also consider the closing date. And why am I considering the closing date? You can look at your statement and see when the closing date actually was for that month. It's usually about a week or so before the actual due date. That was your closing date, because your closing date is so say, let's go back to that same scenario with those 4 cards, and say you don't use Target, so you still have your 1,000 available, and that $3,000 card, you use $1,000, but you decide to pay it off on the closing date. To you, you don't owe nobody. You're at zero, right? Not on the closing date. You paid it on the due date. That $1,000, you paid it back on the due date. To you, you don't owe nobody. Your stuff is zero, right? But if on the closing date, which was a week before the due date, you still owe that $1,000, that's what gets reported to the credit bureau. Even though you paid it on time, you didn't pay it before the closing date. So now it looks like you still use 25% of your credit. Okay? So again, if you lost your buffer, you use 33% of your credit. You're making your score drop. Okay? So you need to make sure that on the closing date, you pay as much of your credit as possible, right? So put the whole $1,000 back if you can. The day after the closing date, if you need that $1,000 because you need to pay rent or something, or you use it to pay, I shouldn't say rent, but you use it to pay your car insurance and your utility bills, do that the day after the closing date. So your credit report won't be affected by the fact that you used it. And then make sure you pay the minimum monthly payment on the date it's due. So how long you've had credit is 30% of your score. How the percentage of your credit that you're using is another 30% of your score. I want to tell you right. So how long you've had it, the percentage that you're using is 30% of your score. Your credit mix is only 10% of your score. Oh, and paying on time. And paying on time, that's 30% of your score. So how long you've had is 30%. How much of it you're using is 30%. Paying on time is 30%. And then the mix of credit. So do you have a mortgage? Do you have a revolving account, which is a credit card? Do you have maybe a loan or something else on your credit? So the mix of credit is 10%. And so collections can make your score drop. Actually, people going in and taking a look at it. So say, and I hate store credits. The reason I hate store credits is it hits your score right away. It's not a soft pull when you apply for a credit card at the store. It automatically hits your credit. So if you sketchy and you think you might not get it and you don't get it, you could lose like 20, 25 points instantly. Okay, Jesus, love. That's a good idea then. You have about 5 credit cards open with no balance except with one. Yeah, then get rid of your Target. It shouldn't hurt you. And you only had the Target for 2 years. Just don't get rid of the one that you had the longest. Yeah. But again, 5 cards open with no balance. As long as you're not going to use that for anything. Because if you have an emergency or something and you need it. But is it wise to pay the total amount off? You can pay the total amount off. It's just that you need to use it from time to time, because some credit card companies will reduce, like this person that has 5 credit cards open with no balance except for one. They can come back and reduce your available credit, and they can close your account because you don't use it. It's a dormant account, so you have to use it a little bit. Yep, it's wise to pay out the total amount. I would say pay out the total amount by the closing date. And again, if you need to use it, then just use it, but make sure you pay it off again before the closing date. And there'll be none the wiser, because I'm gonna tell you something about not using credit. Um, they're gonna know that you don't use it. Creditors who are considering giving you, okay, so these different scoring models have different ways that they're looking at your credit. And some of them won't just look at your score. Like, you think you got a 740 credit score and you think you good. Um, oh, my TikTok is saying you've been on live for 90 minutes. Don't forget to take a break. I'm getting off at 11 o'clock. Thank you, TikTok. I do 2 hours and I'm off. So you think you're good, and you wonder why some people still get denied credit when they have a 740 credit score, or they don't get the lowest interest rate they think that they should be getting and they got this 740 credit score. They know that some people are carrying debt, and they know some people are carrying credit that they just don't use. So what am I gonna make off of you if you don't use it? They could tell that you don't use it. So you need to use it a little bit. Or again, the original creditor will either reduce your credit limit, or they will close your account because it's just sitting dormant. So do something with it. Make wise decisions. And the oldest account, make sure that that's the one that you use a little bit on. The oldest account usually is the one with the highest interest rate too. I know, sugar, so make sure that you pay it within 30 days and you won't have to pay the interest rate. All right. Anybody else got anything else that they want to know? Mm-mm-mm-mm. Yep. Anybody else got anything they want to know? Open up multiple credit cards to build my credit fast. No, because eventually they're not going to. You open up multiple credit cards to build your credit fast, they're going to deny you credit because you open up multiple credit cards to build your credit fast. So that's no trick. But I'm going to tell you what you need. You need, if you can get 2 credit cards, this is ultimate credit. If you do have a mortgage, awesome. But if you have a loan, that's a steady fixed amount. So a car note or a small loan that you got that's reporting to the credit bureaus, that's okay. And maybe 2 credit cards, that's good. And if you could have a mortgage, a car note, and 2 to 3 credit cards, you got a good mix of credits. Or if you have a car note, a mortgage, maybe 2 credit cards and a small loan or something like that. Even student loans, y'all don't know, but student loans, even if you have a student loan and it's deferred. So say you have a student loan and you're not making any payments on the student loan because you did deferred payments, and it's just sitting. The fact that you talk to the student loan people and you set up deferred payments so that it's showing that you don't have to make any payments, but it's showing on time for those no payments every month, that still affects your credit score. That is still an open trade line that affects your credit score. So you want a good mix of credit. My credit score is about a 760 and my son is 780, but both me and my son is on disability. Do y'all want a house? Is that what you're saying? Do y'all got that good old credit? And you want a USDA mortgage, they will take you. That's income. So I don't know if you were here, Jesus Love It First. If you go to that eligibility thing screen that I just took you to, put in both of y'all income. Okay, so Jesus, let me make sure I'm telling people the truth without telling people to do anything deceptive. Let me take you back to Granny who left the house. Granny stayed in the house with y'all at first and she had income, and then she left. And so your income dropped. If y'all can afford the mortgage payment still, great. If you cannot afford the mortgage payment still and you didn't already get a subsidy, you can go back and say, well, Granny doesn't live here anymore. I need some help with my mortgage payments. What help can I get? Now, the thing about a subsidy is they can say, well, Well, we don't think you can afford the house anymore, but they can't kick you out the house if your payments are on time. But you can at least find out if you're eligible for the subsidy should somebody leave your household. But only the two people or the person who applied for the mortgage are the people that got to stay there. So say when you moved there and you got the mortgage, you had this scenario I just told you about with the 18-year-old that's working, and you had Granny stay there, and then 3 years later the situation changed. As long as you weren't getting a subsidy or anything like that, and you were just making your payments or whatever, they don't have nothing to do with what happens in your house after you get the mortgage. So I ain't telling nobody to do nothing wrong. I'm just telling you your life is not confined to that mortgage, because these were the people whose household income they used to help you get the mortgage. Now they say if your household income has changed, you're supposed to let them know, and you can let them know, but it's not necessary for them to know if you're not getting a subsidy. So if they're not helping you pay your mortgage, and you're making your mortgage payments on time regardless. I don't know, maybe sometimes you're able to get a part-time job, but you only want to work it 6 months out of the year, like close to Christmas or something like that. And you save up as much of that money as you can so you can pay your mortgage for the rest of the year. That's your business. After you get the mortgage, that's your business. But they're going to consider the household income when you first get the mortgage. So you want to include as much income as you can to qualify for as much house as you can within reason. Use wisdom. Don't try to manipulate the system so that you can get what you want, and then you can't afford to keep it because you knew that your mother, who's staying with you now, was going in a nursing home after you get this house, and now you can't afford it. Don't do that. But don't feel like these people have to stay in the house with me all the time or I'm going to lose my house, because it's not like that. Once you get the mortgage, it's your mortgage, you and the person whose name is on the mortgage. So all the people that I just told you whose income they have to include, they don't have to be on the physical mortgage. They just have to include who's ever in the household 18 and above who receives an income. They have to include them in the mortgage. So say, mom, you and your son are getting the mortgage, but you get a mortgage in just your name, they still can include his income, and he don't have to be on your house. He can go get him another house, because you can do modular homes and trailers too. But and there are USDA lenders that will say no, you can't. But if you look it up online, do a Google search, can I get a modular home? There are areas that do allow you to do modular homes and mobile homes. Wait a minute. Okay, somebody asked me, is it true if you add your young child on your credit card, it will increase their CORI when they get 18? You are absolutely correct. Okay, so I recommend, now this is how I recommend families build credit. And a really good, okay, let's start over. Okay. So say you have a credit card. A lot of credit card lenders will allow you to do so many number of people as authorized users on your credit report. So say you got a credit card, and like you said, you want to put your child on as authorized user. They usually have to be 15 and older in order for them to be authorized user on your credit report. But once they are, and each credit company has their own guidelines. Once you put it on there, they've built 3 years of credit up until they're 18. Yes, that is absolutely true. And I try not to get too personal, but for me personally, my children all had credit scores above 700 and something before they were 18, about the time they were 18. So when they pulled their credit scores, they all had over 700. But it wasn't off me. We used, one of our children had got a student credit card from Discover. There's somebody else that needs to be sponsoring me because I talk about them a lot. Student credit card from Discover when he started college. And I said, well, just go ahead and put your brothers on there so they can build credit. So he put all 3 of his younger brothers on there. And each of them, when they turned 18, they all had credit scores above 700, because we made sure that one child's credit card was kept like top notch, top flight. And he recognized that he was impacting his brothers by the choices that he was making. So we made those decisions together. Let's see what's going on. Make sure your payments are made on time. Make sure you're only using what you're supposed to be using. When financial aid comes out and you get extra money, we'll use that and we'll pay it down. And we just kept it paid down. And each child, now I have 4 children in college and all of them have credit scores above 700. And they all got their own credit when they turn 18. Yep, that's true. And I'm not telling you what I think, I'm telling you what I know. Because I did it in my household. And everybody in my household has a score above 700. But that 700 is going to fluctuate. So some people got a 780. Some people got a 725. Because people doing, some of the things that they want to do. But everybody make sure they make their payments on time. Keep their balances as low as possible. Do they accept Section 8? I don't know what you mean. Do they accept Section? Oh, you talking about Section 8 has a program where they help you purchase a home. I don't think the Section 8 program, that Section 8 purchase home program, I don't know how that one works, because I've had some people who are on Section 8 and one person tried to purchase a home through there. Because that loan, to me, as far as I know, is credit driven still, where they help you purchase a home if you're on Section 8. Ooh, I'm yawning. I ain't got 20 minutes left to go. But USDA is a direct loan. So if you are on a fixed income or you are low income, you just use your income to purchase the property, it's going to be a similar program. That Section 8 program, I think they require you to take some classes or something like that, and USDA don't. They have one class that you take, and it's like somebody sit down and talk to you maybe 45 minutes, have you go over things, make sure you understand what a loan is and what you're getting into and stuff like that. But the Section 8 program, they have this thing where they send you through for so many months and have you go through so much stuff, But it works. But that's not limited to rural if you do the Section 8 program. So if you get in the program and it works for you, awesome, because again, USDA loans are subject to certain areas. And y'all don't just have to ask me about USDA. I know other, simple one. So what is that you're telling me? You have an 848 credit score. So you still can qualify for the mortgage if you want that lower interest rate, because it is the lowest interest rate in the country. So that's going to allow you to be able to afford more home because your interest rate is so much lower. So if you don't disqualify because you make too much money, then great. You just get, it's funny about you saying you have an 848 credit score. I don't know what your income situation is, but somebody said if you're poor, you won't have a good credit score. And I was like, says who? Just because you poor don't mean you don't pay your bills. What? So, yeah. So, yeah. But 848 credit score, a simple one. You can do the USDA direct, or you might want to consider, and these are rural loans, keep in mind. What's not true? Tell me what's not true. The people who are poor can't have good credit. That's not true. But did I say something that's not true? Tell me what it is so I can fix it. Simple one. Don't just say yes. Yes, what? What did I say that's not true? Poor people. Okay, this is what I keep repeating. That poor people have bad credit. Look at what you did. Poor people do. So you're saying poor people do not have good credit. That is not true. Why would you not have good credit just because you're poor? What you call poor? If somebody only makes $800, only gets 800. Okay, so SSI is for people who are low income, so people who are low income, they can only get $800 something a month. That's considered poor. I know plenty of poor people who pay their bills on time, and they got good credit because they pay their bills on time. And that's the thing about credit. You can have a $500 credit score, and $500 credit card, 2 $500 credit cards, just 2, and make your payments on time every month, and you'll have good credit. You understand what I'm saying? I know people who have fixed income and purchase homes through the USDA, got credit cards, got cars car loans, they can get whatever they want. Money ain't got nothing to do with good credit. It's just being responsible. Credit scores are just a mechanism to use to determine your credit worthiness. Are you going to make right choices? Exactly. Okay, now you got to write your sentence out. Take your time to write your sentence out correctly, simple one, because I was about to say, oh, you getting ready to get on me. I was getting ready to get on you. I can't, because somebody literally wrote that one time on one of my things. I'm not, okay, so praise the Lord, because of my family size, we are a certain level above the poverty line. But if not, it would look like we had more money than we have. Okay. But as a result of having the family size I have, it makes our income look like it's less because you have to make it stretch over more people. So praise the Lord, we're not poor by definition. And if we were, I just trust that my bank account don't have to look like what I have, because I have a God that makes my money stretch. But that's a whole nother story. My bank account don't look like my faith. And my faith stretches my bank account quite far. But yeah, I had somebody say that, and it made me feel so sick, because I was like, I know so many people, because I'm from Chicago, y'all. And I'm about to get off of here, so I got 15 minutes. I'm originally from Chicago. I moved down south, and I moved initially into a rural area. So I was around people who did not live like I was used to living, because I own investment properties. I've owned businesses. I've helped other people have investment properties. I was a grant writer. I did grant reviews. I sat on committees for grant writing. I was vice chairman of business organizations, well sought after to do things in Chicago. And I moved down south because I had such a large family. And we were raising, young black men, and we wanted them to be in an environment where we could help them to nourish and grow without the challenges of living in the big city. And I'd lived in the city my whole life. So we decided we wanted to do something different, so we moved south. But I'm saying that to say, I was exposed to things in the South that I wasn't familiar with, having lived in the city, southern Alabama. And so exposed things. And so one of them was these USDA mortgages. And because I did so much with grant writing and government stuff, and I used to work in an insurance industry, and I'm used to legal beagle stuff, I end up helping people out of situations, and helping them to understand their mortgage, and helping them. And then I started working. I work on a federal study right now. I can't tell you the name of it, but I work for the federal government on a federal study. I'm contracted to do it, and it's a Medicare study. I will tell you that. And so I talk to people when I'm in their home all the time. So I hear their struggles and their situations, and sometimes I give them, if they tell me what's going on, I tell them things that I know that they can do to help their situation. Now, I'm not getting into all their credit and all that kind of stuff, but it might be, a spouse died, I don't know what to do. Did you make sure that did you make sure that you apply for your spouse's Social Security, so that you can have that income to add to your income? They won't give you more, but they'll give you what he was getting. And so that's going to help you a little bit. Did you talk to the mortgage company? Have you talked to them about doing a moratorium or modification? Have you talked to your car company about deferring your payments for a little while, just to get yourself on that kind of stuff? So I talk to people about helping them with stuff, but I learned so much about these USDA mortgages, because people run into struggles, and I'm like I was talking to people who were packaging the loans for the USDA before I ever thought to apply for one myself. I was helping people with stuff. So I learned a lot. And one thing that I found out is people who you think are poor find ways to thrive in their circumstances. And there are programs out there to help people. I mean, I know about a lot of them, because some of them I've used, and some of them I just help other people use, because I'm somebody I do my research. I try to find, like, you're not supposed to have any money, and you got an insurance policy. And did you know that if you had a life insurance policy and you are on disability, that could be counted as income against you once you get a certain age and it's paid off? Did y'all know that? It's stuff like that that people don't know. So what do I do? I didn't know I was supposed to have that, but now it's paid off. Now, if the federal government find about it, they consider that income. Well, what I would tell you to do is take that money and go pay for your funeral expenses up front. Get rid of it. you know, or they can't tell you how to get rid of it. They'll tell you that you have to spend it on something that like that or something feasible. They can't tell you what to do with your money. If you get a lottery check or some money from somebody and you want some kind of fixed income, you can give that money away if you want to. They can't tell you what to do with that money. So you will have to report it to them and report that you gave it away, who you gave it to, and how much you gave to them. Then they will have to write a letter saying that, yes, you gave me this money, how much you gave me, and when you gave it to me. And that goes to Social Security so that they can't touch your disability if you are on low income substance. You know what I'm saying? So it's things that I found out to help people, and I use that to help people in these environments too with my TikToks. But in the meantime, so I just some things that insult me. It's not because it applies to me. It's because I know people it applies to, and this thing that people put people in a box. That kind of bothers me. So I do get defensive. So don't tell me poor people got to have bad credit, because that's not necessarily true. People are not irresponsible just because they were not able to get out of their circumstances. Life sometimes keeps people oppressed. Anyway, sorry, that was my tangent on that. So, any other questions? I'm getting off of here in 10 minutes. Y'all, I talked to y'all all about these USDA mortgages, and y'all gonna go and try to get these mortgages, and you're gonna say, I can't find the application. When you go to the application, you're gonna go to OR 502. If your rent has been affected due to COVID, they hold key payments, late payments against you. You may have to explain to the USDA what happened. So they're going to ask you for a history of your payments, and you're going to be able to get that from your mortgage company. And then you're going to tell them that I was off work because of COVID and I took advantage of the COVID mortgage relief moratorium. And you'll tell them when it was. They may not require you to get proof of the moratorium. I mean, but they will probably ask you for your payment, your rent payment history from your landlord, if they're willing to give that to you, or a letter from the landlord. Now, I could tell you, I know somebody who got a letter from their landlord, and their landlord said that they were sometimes late on their mortgage. These people that they said was sometimes late on their mortgage maybe had been late on their mortgage 3 times, but they had a disgruntled person in that office that was trying to keep them from being able to get their USDA mortgage. The USDA will ask you for a letter explaining what they're talking about. And so what you do is you get somebody to say you were late on your mortgage multiple times and ask them for a history of your mortgage payments, even if you were in that moratorium, because you may have to say, I was in a legal moratorium. I was afflicted by COVID because I had to hold back hours, or I had children that I had to take care of that weren't in school, whatever. You just have to explain it. And they will take your explanation. I say that to say, even before the COVID thing, I know people who had to provide explanations as to what the mortgage company rental place was saying. What do you think about a home that's been for sale for 6 months and no price reduction? They're being stubborn because they know that it's hard in the market for people to find homes. But if it's been on the market for 6 months with no price reduction, and you have a USDA mortgage that you want to put in front of them, you got something to work with, because that person is not in a hurry to sell. They want a full price offer. But if it's a USDA mortgage, they're going to send an inspector out there. And that's the thing about USDA mortgages too. The house has to pass inspection. So, before you go looking at a house for USDA mortgage, know that they're going to be looking for certain improvements. So, they're going to want them to have double pane glass windows. They're going to want, and they do allow home improvement under USDA mortgages. You're going to have the people at the office are going to say they don't. And there is a section in their training that tells them that they can approve for people to do home improvements to make the house safe or to get the house approved. You can include those improvements in the loan. It's an older home, no improvements, $250,000. It depends on how much it is. Is there going to be enough value left? Is okay, so what they're asking for the house, is there, if you do the improvements, what is it going to take the mortgage to? Is there room, is there wiggle room in there for you to still be able to get that mortgage approved? I would probably go, if you have, I am nothing but net, if you have a decent enough credit score and you can go directly to a approved lender, then you might be able to get them to get that mortgage approved. And yes, they can do a home improvement loan with that, but your score would need to be above a 640. You can still get that low 3.25% interest rate, but your score would need to be above 640. But because that 250 is kind of high, like there are some areas, depending on where you at, like it's just some areas where houses just cost more, so the income, so the home purchase amount maximum may be higher, but 250 is already pretty high. So that might take you from a USDA direct loan to a USDA guaranteed loan through a lender. And then you would ask them, can you do a home improvement with it? And they will allow to a certain amount of home improvement. So it can't need a whole rehab. Should she inform the mortgage company? Will she have to pay off or continue? Okay, so which scenario are we referring to? Heck, Matt. Dang, y'all don't have 1,000 followers. If y'all had 1,000 followers, I'd invite you on. So Heck Matt Nash, Nasibe, Heck Matt. I don't know what I asked you. Okay, should she inform the mortgage company? Will she have to pay off or continue? I don't know what scenario you're referring to. Give me the scenario, Heck Matt. Thank you. I think it's only worth $200. Yeah, if it don't appraise out, because see, with these mortgages, you can include the full price of the mortgage plus the closing costs. So if a house is appraised and they find that the house is worth more than the amount that the person is asking for, so they're asking for $175,000 and the house is worth $180,000. They can include the closing costs in that. But they will include the closing costs anyway on the USDA mortgage direct. But if it's a guarantee, the house has to appraise for slightly more. But you can get that approved. But yeah, if it's only worth $200, it's not anything in there. That's a stubborn seller. Maybe they need the money. I don't know. Tell me, Heck Matt, what are you referring to? Mortgage is his name only. Deed is her name only. What is she? The mortgage is in his name. And the deed is in her name. What are you talking about? To sell? What do you mean? I don't know what I said to trigger that question. Like, to do what? Because it's a USDA mortgage. It's not a USDA, because a USDA mortgage, when you couldn't do that with a USDA mortgage. So this is some other type of mortgage you're referring to. What do you... Okay, let me see. I am nothing but net. Let me see if I can go back and figure out what you're saying. Oh, yeah, he probably think his house worth more than it is. It'll be there. It's not going to get probably approved for USDA anyway, because they have to have some modern improvements. It has to be safe and sanitary. And like I said, all the windows have to be double pane windows. The plumbing and everything has to be working, not any problems with it. I mean, certain things. The septic tank has to be clean and inspected if it's a septic tank, if it's not on the sewer. They have to do a full inspection of the property outside of just the appraisal. Have to get an inspection. And when they do that inspection, Can't have no bunch of crazy stuff going on in that house. They want that house to be something that you're going to be able to move in and not have problems with. Because if you do have problems, they do allow you to get loans to improve it. If you're 62 or have somebody in there with a disability, they allow certain grants. But the house has to be safe. And, you know, yeah, he gonna be, yeah. It was a house I wanted. God, I love that house. And I could have made them fix some of the stuff in there. But after going through the process myself and getting my own loan, I realized that what they send you through to get a house approved is worth it. Because they don't want you, if you already can't get a regular mortgage to a regular lender and we're giving you more money than you actually would normally qualify for by giving you a low interest rate. Last thing they want you to be doing is taking some of your money to fix something up. Okay, my sister's name isn't on the mortgage and he passed away. What should she do? Pay off or refinance? If she can refinance, it's a matter of her. It's a matter of her financial situation. But if she can't, she won't be able to use the USDA because unless it was already a USDA mortgage, they won't let her do that. But if it wasn't, if it is a USDA mortgage, they will let her refinance through the USDA. If it's not, she'd have to go through a traditional lender to refinance because you can't go from an FHA to a USDA mortgage. Now I saw something in there about if you're in foreclosure and all that kind of stuff, but I don't understand that part. But if she had a USDA mortgage and her spouse passed away and the mortgage was in his name, but now she still owns it because now it's deeded to her, then the USDA will let her finance that mortgage under her name. So she can refinance under her name. Yeah. But I would have her check with that because like the house itself has to be the mortgage probably let her assume the mortgage already because it's her husband's mortgage because the deed is in her name. So I'm assuming that they let her assume the mortgage as long as she can afford the payments. So she probably would need to contact the mortgage company if it's an FHA, and if it's a USDA, then she just needs to refinance under the USDA. Can you tell me if your mother have an FHA house and she passed away? Don't it have insurance? Don't it have insurance to pay? Okay. She has a FHA house and she passed away. Are you referring to the mortgage insurance? If she never claimed that, then they have to give that back. The 20%. Okay, so for FHA mortgages, once you pay 20% of the cost of the house, then they are supposed to stop taking out the FHA insurance mortgage. There's a mortgage insurance. It's not the property insurance. It's the mortgage payments insurance that FHA forces you to pay if you do not put 20% down on the cost of your house. Once you get to the point where 20% of your principal has been paid, they're supposed to stop making you pay those mortgage insurance payments. But they typically don't automatically stop. So yes, if she paid that for however many years, she paid the house off, and they're supposed to get that money back. And if you are the person who owns that home, they got to get that money back. They can't keep her money. So yes, they're supposed to pay that back, that property mortgage insurance. But it's not to be confused with property insurance. It's property mortgage insurance. So it's a percentage. It's usually like 1% of the mortgage that you have to pay in mortgage insurance premium every month towards your mortgage. And like I said, they don't always stop it once you get to 20% of the principal. So they're supposed to give that money back to you if you tell them to get it back. I really need some advice. Send me an email. If I can help you, darling, Yola, I will. Even if she isn't on the mortgage. Is it a USDA mortgage? Yeah, she can. Because remember I told you about, because she lives in the household. He no longer lives there. If she doesn't have a USDA mortgage, yes, she can refinance that into a USDA mortgage, because I don't know if I don't know if he was getting a subsidy or anything like that, but she's his spouse. She has an interest in that property, and she's holding the deed. So USDA is not gonna go for that anyway if there's still a mortgage on it. So she needs to refinance through USDA, or like I said, the FHA sometimes will just let you assume the mortgage, but you need to talk to the mortgage company. You could talk to the mortgage company hypothetically. You don't have to tell them who you are. Just call them and ask them. You don't have to tell them. Just tell them I have a hypothetical question because I want to know. You know, I have a general question. Deed in my name. Papa left his wife in there as life estate and she died. And now the deed is in your name. I would say contact a attorney. They're only gonna charge you like $350 to $500 and really get the details, because the problem with the deed is already in your name. And so you're telling me that you have a mortgage left on there. You can assume a person's mortgage, but the mortgage company normally has to allow you to do that. So it doesn't become your property. So you may end up having to sell it. Email me. Now house is condemned. The house is condemned, but the deed is in your name. It's a $41,000 mortgage on it. Email me. I cannot tell you that I know about that situation because I am not a lawyer. But I can tell you I'm very interested in your situation. And if I can't tell you how to figure it out, I will find somebody who can. But that kind of stuff. I research that kind of stuff. I'll figure it out. And they took out a loan. But the mortgage is not in your name, but the deed is. I'll find something. I'll find it. The deed is in your name, not the mortgage. Let me tell y'all something about a mortgage. A mortgage, I got to get off here. A mortgage is a piece of paper that does not have any weight. It is technically a piece of paper, and it does say that person owes something, and they'll use the house as the collateral to cover the mortgage. If it ain't worth anything and the deed is in your name, you can talk to the mortgage company about signing the deed over to them so that they can take over the house. If it's just a thorn in your side and you don't want to be responsible for the taxes and everything like that, then you could talk about using that deed to it would be a deed in lieu of foreclosure. It would be, I'm going to give you the deed and you take the deed and you take the mortgage, and I don't want to have anything to do with it. So there are ways for you to get out of it, because if you don't do that and it's condemned, then you're going to be responsible for the taxes on a property that has a mortgage on it. You understand what I'm saying? So you're going to want to try to get from under it. They ain't going to want to let you from under it, but they'll try to get you to sell it. They'll try to get you to... Okay, so I had one of my investment properties. My tenant tore the property up. Then my tenant left, and when she left, the community came in, stole the furnace out, tore the house up. We didn't want to have nothing to do with the house. It was like I'm in a situation I can't make this be no better. And so, but that we did have that mortgage in our name. And the mortgage company was like, look, if you give us $10,000, we're going to let you have this house. We don't even want it. The mortgage company went out there and looked at it. They was like, we don't want it. It was worth $160 before they tore it up. They was like, we don't want it. I was like, we don't want it either. So they was like, can you find somebody to sell it to? So we found somebody to sell it to. They bought that house, I think, $7,000. the mortgage company, after they paid the real estate agent and all that kind of stuff and all the fees and all that kind of stuff, mortgage company making them more than $2,000 on the house. But it wasn't in my, I mean, that was in our name, but we actually ended up, that because that was investment property, we used the loss on our credit, and we use the loss on our taxes. But anyway, it's ways to get out of it. But I would love to do some research on that and see what we can figure out and give you some direction. And then at least if you do need an attorney, send you to an attorney, or if you need to talk to a mortgage company, at least you can talk to them with girded up with some knowledge, because we'll find really what the law says and what your responsibilities are, and see if it's a way for you to get out that situation. I don't want it if it's condemned. No, it's nothing out of it. I mean, it's a $41,000 mortgage against a property that's not worth anything. I would be trying to get out of it because of the taxes. So that would be my biggest contention. Because usually when you get a house loan, do they put insurance in case you pass away? It will pay it all. All right, so if you get a USDA, not that kind of insurance, you have to apply for that kind of insurance. So there is an insurance that will cover cover it. But so what the USDA does, so say you decide not to get homeowners insurance, they cover their investment. But not they don't do, like, if you pass away, do they put insurance in case you pass away? It will pay it off. No, they don't do that. If you they don't have that kind of thing, because they only interested in you. They're not interested in your family or in making sure that your family is comfortable. These mortgages are to give people who would not normally be able to get a home, to give them an opportunity to own a home. And because rent is more, in most cases, in a lot of cases, than living in a house. You can live in a house that's safe and clean and affordable for less than you could do the same for rent. That's what these programs are for. But they're not there to make your family more comfortable when you leave, when you die. However, should you die, then your family is now responsible for that house. As long as you didn't get any subsidies on it, they won't make them pay that back, but they'll make them sell the house, or they have to apply for their own loan or something like that. But it's not there. USDA loans are not there to create that type of generational wealth. Now, should they pay for it before they die, then they can do with it what they want to, if they could pay it off before they die. They could sell it before they die to a relative that can go get another type of loan, maybe a FHA mortgage, and buy it from them, and say they only owe $13,000 left on the house, and they decide, I'm gonna sell this house to my son for $13,000. And they son can go get a house, go get a mortgage. You can get a mortgage for $13,000, but let's say $60,000. And your son decide he gonna go get a mortgage for $60,000, even though your house may be worth 180 to 200,000, doesn't matter. They go get the mortgage to pay off your mortgage, so they can buy your house from you before you pass away. Then the USDA gets paid off, and now they own that house. They can do that, but you have to. That's your family has to be able to secure themselves to be able to get your mortgage. Okay. All right. So thank y'all for taking the time for liking the video. I do these every Thursday at 9 p.m. Don't forget to follow, and don't forget to share with people. I do talk about credit. I will, I don't like to see people struggling or hurting. That's just a ministry for me. So I do this as a ministry. I pray one day, I do pray, and y'all pray with me for those who are believers. I pray one day that I will be one of those TikTok people that do really well, but I have a regular full-time job. I am a cyber pastor for my church. Hey, Earth Chick, we're getting ready to get off. So next Thursday at 9 p.m. I'll be back on from 9 to 11. So I pray in the name of Jesus that I'm able to do this and somehow get sponsors and never have to charge. But right now I'm doing these at 9 p.m. I'm not doing any private events or anything like that. I don't charge people when I try to help people, and I don't charge people for the help that I give. I'm just a helper from the heart. And like I said, it's a ministry for me. I believe you sow a seed, you reap a harvest. So that's my shtick. So the way you help me best is to make sure that you follow and share, and please, 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 please be back here at 9 o'clock on Thursdays, and tell your friends. And look at my page, because I cover way more than USDA mortgages. That's just the topic today. People ask me credit, so I talked about credit, but I do way more than that. And I will, if you're stuck, and I know it's hard to find help, like you can't afford a lawyer, you can't. I'm not a lawyer, so I can't give you legal advice, but I can tell you I'm a super researcher, and I will get on the phone and call if I can't figure out something. Is email on my page? Yes, it is. My email address is on my page. I will do whatever I can to try to figure out how to help you, because that's just what I do. Now, I don't have a million people asking me for help. I used to do it for a living, so I had a nonprofit organization, and that's what I did. I founded a nonprofit organization. Okay, Earth Chick, I will look for you. So just go ahead and email me or message me or something, and I'll respond to you. But my email is on there. It's which email did I put on there? It should be cccornerchat@gmail.com. It's easy. So you found me at CC Corner Chat. So do cccornerchat@gmail.com, and I do respond to those. Okay. So follow me. I'll see y'all next Thursday at 9 p.m. I will do some more videos. If you ask me questions, and I think I think that's Darling Yola that needs some help. If something you ask me, that's something I do tell people. The one thing I do is, if you ask me a question and I help you with it and we get the answer, I will do a video on it. Don't think I'm just talking about you. It's not fair for you to ask a question and then get mad because I told somebody else how to do something that I help you with. And I have friends that do that. I'm like, get over it, because that's what I do. I help people. And if you ask me something and I did the research and I turn around and made a video off of it, the least you can do is let me get a like. Come on. All right, y'all. So be sure to I'll see y'all next Thursday at 9 p.m. Central Standard Time. I'm here from 9 to 11, and I will talk straight and answer your questions. Yes, share the knowledge. Iron sharpens iron. That's what I believe. I believe I'm blessed because I help people. I don't have a lot of money to give people, but I have a lot of wisdom and knowledge. And if I don't, I will research it and give it to you. And that is, to me, how I walk in my blessing, because I know I can look around and I know I have way more than my abilities to earn money has gotten me. Okay, so y'all have a blessed evening. Make sure you follow and share, and thank you for your likes. Love y'all. Be blessed. Bye-bye. And email me if you have any questions. All right.